What's up, guys? Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. I really would appreciate it. Also, hit that post notification bell so that you're notified every time I upload a new video. Be careful down in the comment section of the videos. A lot of spam, a lot of scammers. I will never ask you to contact me by WhatsApp or Telegram. I also do not invest money for my subscribers, so please be careful. Don't get yourself scammed. If you want up to 12 free stocks, Webull is going to give you up to 12 free stocks when you open a new Webull brokerage account. Put any amount of money in that brokerage account. They're going to give you up to 12 free stocks for just trying out their brokerage app. There's a link down in the description box of the video. Go click on that Webull link. Open up your new Webull account today. Go get that free stock. Go get that free money. I'm going to also send you a Webull tutorial video to walk you through how to use the Webull app to make your first trade. All you got to do is DM me on Instagram at RichardFain28. Let me know that you opened that new Webull account and that you funded it with some money. And then I'm going to send you that free Webull tutorial video to show you how to start building wealth using the Webull app. Why are investors so afraid of a recession? There's something called U.S. Treasuries. And basically what a U.S. Treasury is, it's a loan. It's a loan that individuals like you and I, companies, hedge funds, institutional investors make to the U.S. government in return for interest. See, the U.S. government has a pretty sizable amount of debt to the tune of, I believe, around $31 trillion. And they borrow money from all of these entities I just mentioned in an effort to keep our country running. See, when we collect taxes here in the U.S., those taxes are used to run our country. But oftentimes, the taxes that we collect are not enough money to run our country. So the United States borrows money in the form of U.S. Treasuries, the 2-year U.S. Treasury yield and the 10-year U.S. Treasury yield. When they are inverted, typically that means we're going to have a recession. Since 1978, there have been 6 inverted yield curves, not including the one we're in right now. And in every situation, they were followed by a recession. So what is an inverted yield curve? If I'm going to lend you $1,000 U.S. government, and I'm only lending it to you for 2 years, yeah, I expect maybe a 2% return on my $1,000. But if I'm going to tie up that $1,000 for 10 years lending it to you, I got to get at least a 6% return to compensate me for lending it to you for 10 years. And that's called the yield, the Treasury yield. What they pay you for lending that money to the U.S. government. Now, when that yield inverts, that means the 2-year yield, you get a 6% interest rate. And on the 10-year yield, you get a 2% interest rate. It inverts, it changes, it swaps, which is not common. But why would that happen? Well, that happens when investors are worried about the state of the economy. When things are volatile, inflation is high, investors start to worry and say, U.S. government, if you're going to get my money, even for a short period of time, there's more risk. I want a higher return. Because right now, I'm more concerned about lending you that money in the next 2 years, what may happen to it, than I am concerned about lending it to you for a 10-year period. And that's what investors are saying right now. And that's all because of their fear of this recession. Some people say, well, okay, well, we're in a inverted yield curve right now, but the economy's booming. We're not in a recession. Well, you got to understand, normally, once you have that inverted yield curve, it's about a 15-month lag before the actual recession hit on average. So if this yield curve started in, let's say, March of 2022, we're right around 15 months now in September of 2023. But you also got to understand, even at the 15-month period, you still got to tack on another 6 months, because the actual technical definition of a recession is 2 quarters where gross domestic product, or GDP, is negative. So now you got to have 2 quarters of negative GDP, which we're not having. And that's the problem. Actually, it's not the problem. That's a good thing. We don't want negative GDP. But that's one of the reasons why investors are pointing to we're not in a recession, because GDP is still strong, right? 2023 year-to-date GDP is over 2%. So that's one of the reasons why investors are still, putting their money into paper assets, is because even though we have an inverted yield curve when it comes to U.S. Treasuries, GDP is still growing. Our labor market is still somewhat hot, adding hundreds of thousands of jobs every single month. And that's the thing that's saving our economy right now, is that red hot labor market. But investors don't want to take all the risks. They're willing to invest in U.S. Treasuries, but they want a premium, and they want to do it short term, because they're not real sure about what's going to happen with our economy, and will it at some point go into a recession. The only people typically that are doing the 10-year Treasury right now are people that saying, hey, I don't know what's going to happen. I'd rather have 2% for 10 years guaranteed in lieu of having 6% for 2 years. And then all of a sudden, at the end of that 2 years, we're in a full-blown recession. Now I can't even get 2%. And that's the money that I need to live on. So some people are just saying, hey, I get it. The short-term Treasury has a better yield, but I'm still going to go with the 10-year because I need security, right? I don't want to worry about it. I need to live on this income. So I'd rather take the 10-year at 2% and be guaranteed 2% return for 10 years than to speculate at 2 years and get a 6% return. And then for them following 8 years, I get nothing. What should we be doing? And again, it comes back to what stage of wealth you're in. If you're in the building stage of wealth, in my opinion, you keep buying assets. You keep buying paper assets. You keep buying S&P 500 ETF that track the S&P 500 index. If you want to buy U.S. Treasuries, do the short-term U.S. Treasury. Why not get the 6%? Whatever it's paying. It's paying better than the 10-year, right? So do that with part of the money. At least you got your guaranteed 5 or 6% for 2 years. But don't put all your money in that one basket. Spread it out. Like I said, S&P 500 ETF. If you like some individual stocks that you believe got a lot of upside. I like the tech industry. I like Tesla. I like Apple. I like Microsoft. I like Nvidia. I like Meta. So those are the individual stocks. If I'm going to buy individual stocks, those are the ones that I'm going to put my money in. But this still is a great opportunity with all this volatility and concern. Still a great opportunity to be with, but you got to be in the market. And you need a brokerage account in order to be able to buy paper assets. That's why I'm always telling you guys about this Webull offer. And of course, link down in the description box. This Webull brokerage account, man, you're able to buy paper assets. You're able to buy your favorite ETFs, and you're able to buy your favorite individual stocks. So click on that link down in the description box and open up that Webull account today. Plus, they're going to give you up to 12 free stocks just for trying out the brokerage app. If you're stopping by the channel for the first time, please consider subscribing, share the video, smash the like button. Thoughts become things. If you can see it in your mind, you can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. And I'm going to catch you on the next video. Peace.
Today's video is sponsored by my company, RF Financial Consulting. And in my company, I work with individuals just like you through financial mentoring and coaching sessions. And in those 1-hour sessions, we talk about strategies to help you get to your financial freedom, whether it be through real estate investing, stock market investing, creating additional streams of income, credit card arbitrage, or starting and growing a business. If that's something that you might be interested in, there's an email address in the description box of the video. Send me an email and let's discuss if I'm the right fit for you.